Viewers and welcome back to another session of Masterclass on Future and Options Trading. दोस्तों स्टॉक या ऑप्शन बाय या सेल करते समय हमारा हमेशा ये सवाल होता है कि क्या ये सही लेवल है, क्या ये सही टाइम है और क्या ये सही स्ट्राइक प्राइस है और कैसे हम अपने करंट पोर्टफोलियो से मंथली इनकम बना सकते हैं। आज की ऑप्शन मास्टर क्लास में हम इसी इंटरेस्टिंग टॉपिक पर बात करने वाले हैं। And it is my pleasure to introduce Ms. Avani Bhatt, our masterclass speaker for today. She is Senior Vice President in Equity Broking of JM Financial Services, having almost 2 decades of experience in equity market. आज के सेशन से रिलेटेड दोस्तों आपका कोई भी सवाल है तो आप कमेंट बॉक्स में पूछ सकते हैं और हाँ व्यूअर्स, चैनल को सब्सक्राइब करना और वीडियो को लाइक करना बिल्कुल भी ना भूलें। तो चलिए शुरू करते हैं। वेलकम अवनी एंड ओवर टू यू।
Thank you, Abhishek. Hello, friends. This is Avani here, and a very warm welcome to the fourth Options Masterclass. Today, we are going to cover a very important strategy, which is the need of the hour. I think every individual who is holding shares in their portfolios, and if at all the portfolio is not going anywhere, then how do you generate returns on it? What do you do with a stagnant portfolio? That's what the topic is going to be covered. Even a stagnant portfolio can give you certain returns, even if the market is not going anywhere. So that's the whole idea of understanding how we are going to do that alpha generation using options. So to start with, so scope of the presentation is the flow is going to be this way. The strategy that we are going to cover is covered call strategy. In this covered call strategy, what exactly is the strategy? How do you select the strikes? What are the 3 scenarios in which you are going to do the strategy, and in which way are you going to do the strategy? Next is the covered call against portfolio. As we discussed, we are mainly going to concentrate on doing the strategy against portfolio holding. If at all there is a delivery situation that comes in, then how do you manage it? Covered call for trading purpose, not against the portfolio, but purely from a speculative trading purpose. And covered call, how do you go about it? Close to expiry. And what are the advantages of this strategy? Why am I stressing on going for this strategy? Why is it the need of the hour? We are going to see that in the coming slides. So what exactly is a covered call strategy? The word covered itself means that whenever you have a long position, either in the cash format, either in the cash segment in your portfolios, or you have a future long position, you take a contra bet in options via selling a call. So selling a call against long futures or portfolio holding, that's called a covered call strategy. We are going to see how do we go about it. So either say for example, you have futures or you have shares bought in the cash segment at rupees 2500. Now at rupees 2500 अगर आपने ये buy किया हुआ है तो उसके सामने आपको कॉल बेचनी है. You are going to sell a call. Now which strike to select? So calls we have, either you can sell at the money strike price, which is 2500 call itself, या आप OTM कॉल बेच सकते हो जो थोड़ा सा आपके बाइंग प्राइस के ऊपर रहेगी, which is around say for example 2600 कॉल, या आप इन द मनी कॉल भी बेच सकते हो 2480 एज एन एग्जांपल ऑफ इन द मनी कॉल. तो अब कौन से सिनेरियो में कौन सी स्ट्राइक सिलेक्ट करनी है, कैसे करना है, वी विल सी दैट इन द कमिंग स्लाइड्स. सो नाउ सबसे पहले हम कवर करेंगे कवर्ड कॉल अगेंस्ट पोर्टफोलियो. अब मान लीजिए कि अपनी जो ड्रीम रैली है वो तो अब खत्म हो चुकी है. जो 2021 में जो ड्रीम रैली हुई थी कि वन वे मार्केट 15-18% चल गया है विदाउट एनी रुकावट, तो उस सिनेरियो में तो अपने पोर्टफोलियो में पैसा बन रहा था, अपने पोर्टफोलियो में रिटर्न्स दिखाई पड़ रहे थे. बट नाउ व्हाट इज हैपनिंग इज मार्केट इज नॉट गोइंग इन अ लीनियर वे. देयर आर लॉट्स ऑफ हिकअप्स दैट कम इन. काफी रुकावट आ रही है, 18,800 तक आ गई है मार्केट, वहां से फिर नीचे आ रही है. twice in last 2 years, it has happened that market has gone up to 18,800 and it has come down all the way to 1,500 and 16,800 as well. So in such scenarios, when your stocks keep going down, but you cannot sell them. Now, there are two reasons why you cannot sell them. One is because the obvious reason is that the price of the stock has gone down below your buying price. तो आपको लॉस हो रहा है और आपको लॉस बुक नहीं करना है. दूसरा रीजन ये भी है कि आपको अगर टैक्सेशन पर्पज से लॉन्ग टर्म होल्डिंग है तो शॉर्ट टर्म गेन अवॉइड करने के लिए आप 1 साल तक बेच नहीं सक रहे हो या आप 2 साल तक बेच नहीं सकते हो, आपको ये स्टॉक रखना ही है. तो ऐसे सिनेरियो में हम क्या करेंगे? सो आई हैव टेकन एन एग्जांपल ऑफ आईसीआईसीआई बैंक. मान लीजिए अभी करंट मार्केट प्राइस है उसका 925. तो हम एक कोई भी पोर्टफोलियो में कोई भी स्टॉक हो, एफएनओ स्टॉक हो, तो उसके सामने उसी पर्टिकुलर स्टॉक के कॉल्स हम हर महीने बेचते रहेंगे. सो और कॉल की स्ट्राइक कौन सी होगी, उसका सिलेक्शन कैसा होगा, हाउ डू यू सिलेक्ट अ स्ट्राइक टू बी सोल्ड. So for that, in case of ICICI Bank, I am taking a strike which is 5 to 6% away. I'll tell you the reason also behind that. So say for example, 5 to 6% away strike we have selected from the current market price. So either आप दो चीज देख सकते हो, either you select a strike which is holding the highest open interest. I've taken this data from the option chain, NSE option chain for the month of July. Now that we are close to expiry, just 3 days to go for expiry. So we'll be selling calls for the next month, which is July month. 5 to 6% away strike would come to 980 from the current market price of 925. But in the next month, the highest open interest, here is the open interest. If you see the highest open interest, 883 figure is placed at 950 call. Okay. So we can do certain analysis of our own and we come to some in-between strike, which is say 970. Now we are selling a 970 call for the month of July at a premium of 10 rupees. So what is going to happen on expiry, on July expiry? Expiry के July expiry में क्या होगा? Month end हो जाएगा तो हमारी क्या position रहेगी? So this is the scenario. In this case, आपके या तो पोर्टफोलियो में 700 शेयर थे या तो आपने फ्यूचर बाय किया था एट द प्राइस ऑफ 925 एंड आप 970 का कॉल शॉर्ट कर रहे हो एट 10 रुपीज. सो इसमें क्या हो रहा है अभी कि इफ यू सी लुक एट दीज लेवल्स कि अगर मान लो 830 स्टॉक एकदम मार्केट खराब हो जाता है एंड स्टॉक 830 तक गिर जाता है तो आपको नुकसान तो होना ही है. बट आपका जो नुकसान है वो 925 माइनस 830, 95 रुपीज का जो नुकसान हो रहा था उसके बदले आपको 85 रुपीज होगा. सो बाय सेलिंग दिस कॉल यू आर गेटिंग अ स्मॉल हेज टू द एक्सटेंट ऑफ द प्रीमियम दैट यू आर कलेक्टेड, दैट इज 10 रुपीज. सो 10 रुपीज से आपका कॉल बच जाएगा. अब इसमें होगा क्या कि इनकेस अगर ये स्टॉक वहीं के वहीं पड़ा रहता है, से सपोज इट एक्सपायर्स एट 920. ओके, नाउ your buying price is 925, it is expiring at 920, which would mean that you are making a loss of 5 rupees. 5 into 7 is 3,500 rupees loss hona tha, but because you have sold a call at 10 rupees, you are getting a profit. 970 call will become 0. So you are getting a profit of 10 rupees in this. So net profit is minus 5 plus 10 rupees, that is 5 rupees profit. So instead of making a loss at 920, you are making a profit of 3,500 rupees. At the same time, on the upside, the disadvantage is that you say, suppose the stock goes up to 1,000. So because you have sold 970 call, you are restricting your profit above 970. So you have a fixed profit, from beginning from 970 onwards till anywhere where the stock goes, you are still making a profit. It's not a loss. So it's a win-win situation that even if the stock goes up, you are still making profit. If the stock comes down, you are making profit on the call that you have shorted. So there is some return. 970 call means almost 10 rupees means almost 1% of the strike price. So you are anyways not going to sell your stock because you had to hold it in the portfolio. And in that scenario, what happens is at least आप call बेच के ₹10 भी जो कमा रहे हो, that is 1% you are earning without any risk that you are taking. अब ये एक बैक टेस्टेड डेटा है, सो हम रैंडमली 5-6% मैंने कैसे मान लिया कि आईसीआईसीआई बैंक में हम 5-6% का दूर का कॉल बेचेंगे, तो ये कोई रैंडम फिगर नहीं है. वी हैव अ बैक टेस्टेड डेटा. हर एक स्टॉक का हमने बैक टेस्टिंग किया है कि पिछले 2 साल में एक एवरेज मंथली मूवमेंट क्या होता है, कि जब एक्सपायरी के दिन पे जब नई एक्सपायरी स्टार्ट होती है, सो फ्रॉम दैट लेवल ऑनवर्ड स्टिल व्हाट इज द हाई दैट हैज बीन मेड in that particular expiry. And on an average, if you see, we have the entire list of stocks. So Axis Bank का जैसे है उसमें 6% का मूव होता है on an average every month. If you consider a stock like Bank of Baroda, the average movement per month is around 10.57, which is almost 11%. तो इसमें आप क्या करेंगे कि you are going to select a strike which is 10 to 11% away, not anything closer. ओके, एंड दिस इज हाउ यू गो अबाउट इट. आपको आपके पोर्टफोलियो में कोई एक पर्टिकुलर स्टॉक है जिसके बारे में आपको जानना है, और उसका बैक टेस्टेड डेटा आपको चाहिए कि हर महीने आपको डिसाइड करना है कि मुझे ये एक पर्टिकुलर कॉल बेचनी है, तो वो कितने % दूर होनी चाहिए करंट मार्केट से, उसका अगर डेटा चाहिए तो वी कैन प्रोवाइड यू दैट यूजिंग दिस बैक टेस्टेड डेटा. अब now we have a system called physical settlement mechanism. So मेरे हिसाब से जो भी ऑप्शंस में ट्रेड करता है, फ्यूचर्स में ट्रेड करता है, इन सभी को पता है कि फिजिकल सेटलमेंट जो है वो एक्सचेंज ने स्टार्ट किया है ऑप्शंस में. सो इसमें कैसा होता है कि इन केस यू हैव अ शॉर्ट कॉल, कि आपने अगर कॉल बेचा है और वो इन द मनी हो जाता है. इन द मनी होना मतलब कि अगर आपका जो स्टॉक है वो आपने जिस कॉल को बेचा है, जिस स्ट्राइक को बेचा है, उसके ऊपर अगर चला जाता है स्टॉक, तो वो हो जाता है इन द मनी. अगर वो इन द मनी हो जाता है, दैट मीन्स कि आपको उस स्टॉक की डिलीवरी देनी पड़ेगी, आपको उसको फिजिकल डिलीवरी देनी पड़ेगी. विच ऑल्सो मीन्स कि अगर इन द प्रीवियस एग्जाम्पल आपने 970 कॉल बेचा था आईसीआईसीआई बैंक में, अगर ये स्टॉक 970 के ऊपर चला जाता है, मान लो 980 हो जाता है, तो इसका मतलब होता है कि आपने 970 में आपको डिलीवरी देनी है स्टॉक की. आपका स्टॉक बुक हो गया, प्रॉफिट बुक हो गया एट 970 रुपीज. सो इसमें इवन अगर आपकी जो स्ट्राइक बेची है उसके ऊपर अगर चला जाता है स्टॉक, फिर भी आपको प्रॉफिट ही बुक हो रहा है. दैट इज व्हाई इट इज कॉल्ड अ विन विन सिचुएशन, कि इन स्पाइट ऑफ अगर नीचे आता है तो आपको जो 1% प्रीमियम का गेन है कुछ नहीं होने वाला था, आपके पोर्टफोलियो में तो नुकसान होने वाला था, उसके बदले आपने एक 1% एडिशनल इनकम बना ली है. ऊपर चला जाता है तो आपका स्टॉक बिक जाता है एट 970 रुपीज. सो यू आर स्टिल मेकिंग अ प्रॉफिट ऑफ 970 माइनस 925, दैट इज ऑलमोस्ट 50 रुपीज ऑन दैट पर्टिकुलर एक्सपायरी. अच्छा, अब ये इन केस अगर आप पुट सेल करते हो, पुट सेल करने का मतलब ही होता है कि तेजी करना है, कि मतलब यू आर रेडी टू बाय दैट पर्टिकुलर स्टॉक at the level of 9, whatever strike you select for selling the put. So take delivery of the stock, मतलब आप वो स्टॉक उस पर्टिकुलर स्ट्राइक प्राइस जो भी आपने बेची है उस लेवल पे आप स्टॉक खरीद रहे हो. सो अभी अगर जो पहले के एग्जाम्पल में कि आपने 6% अवे का 6% दूर का आपने कॉल बेचा था, स्टॉक चला गया 6% के ऊपर, आपने डिलीवरी दे दी है. सो ये ऐसी सिचुएशन होगी, माने आपका पोर्टफोलियो से ये स्टॉक हट जाएगा, आपको जो आपका होल्डिंग था वो आपने बेच दिया है. अब अगर ऐसी सिचुएशन आती है तो अगेन विल कंसिडर द सेम पोजीशन. आपके 700 शेयर्स लॉन्ग थे 925 पे, 970 का कॉल शॉर्ट किया था 10 रुपए में. अब अंडरलाइंग स्टॉक जो है, मतलब स्टॉक का भाव 970 के ऊपर चला जाता है, the stock moves above 970, you are delivering the stock, means you are selling the stock at 970 rupees. okay, and effective profit इसमें क्या होगा, आपका 970 minus 925, ये तो आपका एब्सोल्यूट प्रॉफिट हो गया, प्लस आपने 10 रुपीज का प्रीमियम भी कलेक्ट किया हुआ है बाय सेलिंग द कॉल. सो आपका नेट प्रॉफिट हो जाता है 55 रुपीज. which is 6% returns in that particular month. चलो अब डिलीवरी तो चली गई. Now you have already sold the stock, but you don't want to part with your holding. आपको स्टॉक तो चाहिए आपके पोर्टफोलियो में. तो अगर ये ऐसी सिचुएशन आ जाती है कि जब आपको डिलीवरी देनी पड़े स्टॉक में, तो उसी एक्सपायरी में आप सेम स्ट्राइक पे मान लो कि आपको 960 में ही वापस स्टॉक खरीदना है या 970 में ही वापस स्टॉक खरीदना है, तो आप उसका पुट बेचना स्टार्ट कर दीजिए. सो सेल अ पुट स्ट्राइक ऑफ 970 और लोअर, कि मान लो आपकी डिलीवरी चली गई है 970 में, स्टॉक सेल हो गया है 970 में, बट आपको थोड़ा सा प्रॉफिट उसमें भी करना है, ट्रेडिंग प्रॉफिट करना है, तो आप 960 का पुट भी बेच सकते हो, या आपको सेम भाव में खरीदना है वापस, तो आप 970 का पुट बेचना स्टार्ट कर दो. व्हाट विल हैपन नाउ? सो ये एक केस स्टडी है. अगेन हमने एग्जांपल सेम रखा है आईसीआईसीआई बैंक का. ये जो ड्यूरेशन है लास्ट जुलाई से लेके नवंबर तक का, बिकॉज ऑफ द स्पेस कंस्ट्रेंट आई हैव यूज्ड ओनली सो मच डेटा, बिकॉज रेस्ट ऑफ द मंथ्स द स्टॉक हैज रिमेन्ड लोअर. दैट्स व्हाई द कॉल ऑप्शन दैट यू हैड सोल्ड हैज बिकम जीरो. नाउ ये जुलाई एक्सपायरी में the stock was trading at 81. So जुलाई एक्सपायरी में on the expiry day अगस्त का जो भाव था 814.6 पे आपका ट्रेड कर रहा था स्टॉक. आपने उसमें 5.24% मान लीजिए या 6% मान लीजिए, बिकॉज राउंड ऑफ करेंगे अगर स्ट्राइक तो 860 की जो स्ट्राइक है दैट बिकम्स 6% अवे. वो कॉल आपने बेची थी 7 रुपए में. ठीक है, दिस इज वेयर यू हैड सोल्ड एट 7 रुपीज. अब अगस्त की जो एक्सपायरी हुई उसमें स्टॉक ऊपर चल पड़ा. सो द स्टॉक हैज मूव्ड अप टू 872. तो 872 का भाव हो गया, तो उसकी जो कॉल की वैल्यू थी वो बढ़ गई. आपने कॉल बेचा था कम में, तो आपका तो स्टॉक बिक गया 860 में, बिकॉज आपने 860 में डिलीवरी दे दी है. तो अब आपको डिलीवरी वापस चाहिए, स्टॉक आपको निकालना नहीं है पोर्टफोलियो से. यू वांट इट बैक, यू वांट टू बाय इट बैक. So you start selling puts of 860. तो ये आप 860 का पुट बेच रहे हो, और वो टाइम पे the stock was trading at 870, so 860 was almost at the money. उसका भाव चल रहा था 36.5. Means by selling this put, you are already collecting a return of 4%. Now what happens in the subsequent month? कि अभी आपको आपके पास डिलीवरी नहीं है, सो आप इस महीने में आप कॉल नहीं बेचोगे, आपने 860 का पुट बिका हुआ है. अगस्त से सितंबर में आ गए. सितंबर में क्या हुआ कि स्टॉक का भाव नीचे आ गया फिर से 843. 860 के नीचे आ गया स्टॉक, मतलब आपने जो पुट बेचा था उसकी आपको डिलीवरी वापस मिल गई. तो 860 पे आपका स्टॉक भी वापस आ गया, प्लस आपने ये 4% रिटर्न भी कमाया है पुट में, और प्लस जो 1% 870 कॉल बेच के कमाया था वो भी हो गया. सो नाउ एट द एंड ऑफ 2 months द स्टॉक इज ट्रेडिंग अराउंड द सेम लेवल. ठीक है, देयर इज नो प्रॉफिट नो लॉस इन द अंडरलाइंग स्टॉक. जो पोर्टफोलियो में स्टॉक था आपका बिका और फिर से आ गया. बट उस दरमियान इन दैट पीरियड ऑफ टाइम what you have earned is a total profit of 5% by using options, by selling a call, by selling a put. Now in a scenario when there is absolutely no movement in the stock, the call is going to become zero. So every month you are collecting at least 1% return when the stock is not moving anywhere. So now you see for the month of August अगर आपने start किया होता 870 का भाव था, आपका जो 5.24% आता है 918 पे, मीन्स यू आर सेलेक्टिंग द क्लोजेस्ट स्ट्राइक विच इज 920. 920 का कॉल चल रहा था 9.6, आपको 1% रिटर्न है. स्टॉक केम डाउन टू सितंबर में स्टॉक नीचे आ गया 843 पे, मीन्स योर 920 कॉल हैज एक्सपायर्ड एट 0. You are making a profit of 9.6 which is 1%. Now again in the month of October, for October expiry, your opening price was 843.9 and you sold a call which was 890. The strike price of 890 at a premium of 11.5. Okay, but in that particular expiry for the October series, the stock ran up to 924. So at 924, your premium must have gone up for the call that you sold. But you are going to give the delivery of the stock. आपका stock बिक गया 890 rupees में. You have delivered the stock at 890 means you have sold the stock at 890. And now again you don't want to part with your holding. So you are selling a put of 890. कि आपको तो stock वापस खरीदना ही है. तो 890 का भाव तब चल रहा था 73 rupees, which is almost 8%. 8% रिटर्न आप ऑलरेडी लॉक इन कर रहे हो, तो 8% तक तो कोई प्रॉब्लम नहीं है. तो अब जब आपको डिलीवरी देनी पड़े, एट द मोस्ट 1 या 2 महीने में आपको वापस डिलीवरी मिल जाती है, बिकॉज यू आर सेलिंग द पुट. स्टॉक जो एक तरफा ऊपर ही जाएगा ऐसा जरूरी नहीं है. Every 1-2 months the stocks do come down to your original level of buying, and in between that scenario you are trying to make money through options. You are trying to generate some returns through options. तो ये अगर आप देखेंगे कि अक्टूबर में if you had to give out delivery, November again the stock came down to 938. You have taken back the delivery at 890. See, now month on month, if you see, you started with 925. Again in November, the stock is at 938, more or less around the same levels. But in that period of time, what have you done? You gained 4 plus 1% earlier, 5% return here, again 1% in the month of September. In the month of October, you made a percentage return of 8%. Okay. And so on and so forth. So you keep doing this month on month basis. हर महीने आपको ये स्ट्रैटेजी करते रहना है. कौन से स्टॉक में कौन सी स्ट्राइक सिलेक्ट करनी है, दैट वी विल डिसाइड यूजिंग द बैक टेस्टेड डेटा. कोई रैंडमली कोई फिगर सिलेक्ट नहीं करना है, आपको बैक टेस्टेड डेटा देख के करना है. हाईएस्ट ओपन इंटरेस्ट कौन से स्ट्राइक में है, यू हैव टू चेक दैट. यूज द स्ट्राइक्स व्हिच हैज द हाईएस्ट ओपन इंटरेस्ट, एंड with a very scientific calculation you are going to select a strike for selling in every month, and you are trying to just scalp 1% return. So now out of 12 months, even in say 7 to 8 months, if you are collecting 1% return and the stock at the end of 1 year is not going anywhere, you are still making a 7% profit, which is, you can consider it as a monthly income plan. It's not for hedging. I am not talking about selling a call for hedging purpose, but for making a monthly income, which will take out my holding cost. Now, taking out holding cost means in case if you had the stock in your portfolio, in case if you were not holding the stock, but वो पैसा आपने अगर सेविंग्स अकाउंट में रखा होता, तो आपको कुछ ना कुछ तो रिटर्न मिलता, 4%, 3%. बट अगर आपका स्टॉक कहीं नहीं जा रहा है, सो आपका पैसा ऐसे ही पड़ा है. You are not making any returns. It has become stagnant. So in that case, at least if you are able to collect 6 to 7% a year, you are taking out your holding cost. So this is how you go about in case of a holding in portfolio. Now what we are going to do is we are going to see a covered call trading purpose. Purely trading purpose से करना है कि हमें अभी ये कॉल पोर्टफोलियो में स्टॉक नहीं है, बट थोड़ा सा सट्टा करना है. We want to play around with the stock on expectation of a move up, move down. So in that scenario, I will tell you which strike to select. So you can select the strikes in 2 ways. The first one, that example that we are going to see is you are selling an OTM call. So now you have bought futures at 925. You are selling an OTM call of 940 at 5 rupees. Now we'll see the different scenarios. Expiry पे क्या होगा? So मान लीजिए now the expiry is at 920. See, again the same example. Stock has gone down from 925. Your future has gone down from 925 to 920. Your expectation was that the stock will move up. That's why you bought the futures. But it did not play out the way you expected. But it came down to 920. You would have, in a normal scenario, you would have booked a loss of 5 rupees. But because along with this future buying, you had sold a call also, which was at 5 rupees. At 920, you are making a net no profit, no loss. It's a neutral scenario. Obviously, then lower, it's a speculation. So if it goes further lower, you are going to make a loss. But on the upside, again, above 940, your profit gets booked. So you are getting a small hedge to the extent of the premium that you are collecting by selling the call. So आपका 920 तक तो आपका hedge हो गया, 920 पे आप zero profit zero loss पे निकल गए. अगर ये स्टॉक ऊपर चलता है तो आपका प्रॉफिट बुक एनीवेज हो रहा है. और इसमें what is the advantages when you are using this strategy? You are getting some time that the stock may move up in next 2 to 3 days. For those 2 to 3 days, you have the liberty of, holding on to your stock without any stress or without, giving out mark to market every day, because you have sold a call. So it is somewhere or the other helping you, because it's a contraposition. If your stock goes down, even the call price will come down. Now, next example is a very, very interesting example. You can see for yourself for the current expiry, also for the June month, because we are very, very close to expiry. When we are close to expiry, we are playing more on the time value of the strike that we are selecting. Now, you bought futures at 920. आपका जो in the money call है 920 का call है, it is trading at 14 rupees. Now, since it is 920 call, the intrinsic value of this call should be 5 rupees with respect to the 925 price. Means, say suppose the stock expires at 925 only. Even then, in that scenario, the 920 call should be trading at 5 rupees. But currently, because there are 3 more days to go, it is trading at 14 rupees. So what you're going to do is you are going to sell at 14 rupees, buy futures at 925. So you are getting a benefit of 920 minus 14. Almost you are getting 14 rupees downside to hold on to the stock. You're at 910, you will make a loss of 15 rupees on the futures. But because you had sold the call at 14 rupees, you're making a loss of only 1 rupee. So even if the stock does not go up, because it is easy to predict for next 2 to 3 days, that's why you bought futures, but it did not turn out the way it should have turned out. It went against your expectation and it came down to 910. Even then, you are not making a huge loss, because you have sold a call which was trading in the money, means the premium will also be higher. That's why your loss is just 700 rupees. And if the stock goes up, you have a fixed profit. You have locked the profit at 6,300 rupees. How do you lock the profit? 920 should be trading at 5 rupees, but it was trading at 14 rupees. So 14 minus 5, that is 9 rupees. 9 into 700 is the lot size. That is 9 7s are 63, 6,300 rupees you have locked on the upside. So close to expiry, if you're trading in the money options and playing on the time value, if there's a huge time value left, you can sell in the money call and buy futures. It works very, very well, at least 1 week prior to expiry, if you start exploring this. So this is all about covered calls. What are the advantages of doing this strategy? As I told you, the market is not going to be a linear market. Okay, there will be a lot of hiccups in between. We have a lot of state elections coming this year. Then next year is the national election. And obviously, US rate hike scenario keeps changing every single day. So there will be a lot of ups and downs in the market. And it may happen. Now, why I took the example of ICICI Bank is because although Nifty has moved up so much, this particular stock has not moved up as much. Okay, it has been trading in the range of say 910 to 950, 960, and it has become stagnant over here. So if you're holding the stock in your portfolio, it is not really giving you any returns, although we are looking at all-time high levels in the overall market. So in such scenario, you are still making a profit of 1.5% every month by selling options. And we also know that in case a delivery situation arises, then how do we go about it? How do we deal with it in the subsequent months? So that's the entire idea. Historically, if this strategy was done on specifically ICICI Bank for last 2 years, the average return through options has been around 16 to 17%. Because there were certain months when the IVs were low, currently IVs are low. When the IVs are high, you get higher premiums, and you keep doing the strategy month on month basis. On a longer term, after you look at 1 to 2 years time frame, your stock, if it appreciates from the current level, you are booking profit in that. At the same time, you are making 16 to 17% return through options. So that's the whole advantage of the strategy. It's a win-win strategy. There is no worry about losing out on the stock. There is no worry about losing out on the profits. That's why we need to keep doing the strategy. It is very important, at least for the next 1 year, because in the election year, we know that there will be a lot of volatility in the market, and we have to beat that via options. So that's the covered call strategy, and how we are going to go about it. Thank you all. You can go ahead with your question and answers.
Thank you, Avni, for this very detailed and insightful session which you have done for our viewers. So अभी हम लोग कुछ questions ले लेते हैं जो हमारे viewers का आए हुए हैं. So पहला question हरजीत सलूजा जी का है, and he is asking how to trade in a conditional call and how much time to wait before we enter a call above certain level.
Okay, so conditional call is, say suppose someone has given you a conditional call, buy a particular stock if it sustains above 115. Okay, so if it remains above 115 for at least 10 minutes, then you go for that particular buying of call. So 10 to 15 minutes should be your time frame. The condition level should be maintained. The stock should remain above that level for at least 10 to 15 minutes.
Okay. So next question is by Mr. Jeet Yadav, and he is asking covered call and protective put also bring basis risk against portfolio?
No, why would it bring any basis risk? Because see, at the end of the day, futures are going to settle at the cash price only. So settlement will happen not on the cash price only. So I would rather suggest that you always see the underlying stock price rather than the future price when you are going to select any particular call or put to buy or sell. So in protective puts also, if your underlying is 920, but your future is trading at a discount probably, then put may be trading at a higher price. Then you do not go for a protective put. You would rather be better off selling a call in that case.
Okay. So Sushil Upadhyay is asking difference between straddle and strangle.
Straddle is when you are selecting a call and put of the same strike, and a strangle is when you are selecting a call and a put of two different strikes. So say for example, right now, today's close, say for example, is 18,700 on Nifty. Then if you select 18,700 call and 18,700 put for either buying both or selling both, that becomes a long straddle or a short straddle respectively. And if you're selecting say 18,500 put and 18,800 call, two different strikes, then it becomes a strangle. If you are buying both these strikes, it's a long strangle. If you are selling both the strikes, it is short strangle.
Okay, so we have some questions around alpha. So is option alpha worth it? What are the factors affecting alpha? And what is a good alpha value?
So alpha value is something which you are just trying to beat the basic returns that you get anywhere else, which is say FD returns. If you're getting around 12%, if you can make anything beyond 12%, that's an alpha over your portfolio. So if you can make 15 to 16% returns in options using options this is over and above your underlying portfolio returns. That's a good alpha.
Okay, so is it worth it or in options?
Definitely. That's why we are sitting here today.
Yeah, and what factors would be affecting alpha if somebody is using this strategy? So what should investor should keep in mind?
So, if the market is trending, if it goes in one way, the stock moves up by 30-40% unidirectionally without any pause. Okay, that's when your alpha gets blocked, as in you are making returns on your underlying stock, but because you have sold a call, it gets restricted. So, say instead of 15%, you would have made only 7% on the stock. That is the only risk when you're doing a covered call strategy. Otherwise, the alpha is always an addition in to your portfolio returns. So in a volatile market, it becomes a very, very useful strategy to go for.
Okay. So next question is from Mr. Tala Mansoori, and he is asking, can we place strategies on basis of OI in stock options?
Definitely. So the first point when it came to strike selection, as I said, either based on your backtested data, you decide which strike to sell, 5%, 6%, or 8% away. At the same time, if you are also looking at where the highest open interest is for that particular month, that will also give you a clear picture, because 72 to 73% of the times, the stock never goes above the strike where the highest open interest is placed. So you can do a combination of both. Look at the strikes where the highest open interest is. Look at the historically backtested data. How much movement does a stock give in average movement in a particular month? And then you can come take the average of both these numbers and come to a figure and select your strike accordingly.
Great. So are there any potential drawbacks of alpha strategy?
So as I said, if there is a linear movement of say 30 to 40% in a particular stock, and because if your call strike was hit and the delivery is given, and the stock does not come down at all for next 2-3 months, then the potential profit, you're losing on the potential profit that was there in the stock. Instead of say 20-25%, you have booked only 6 to 7% in that particular stock. So that's the only risk, but the probability of such a move is hardly 1 to 2%.
Okay. So there are a lot more questions, viewers, but I will be able to take one or two more. So this one is, how can investor manage the potential risk associated with option-based alpha generation?
So that's what we covered. In case if the stock keeps moving up in a single direction for more than 20-25% without any halt, without any downside movement, in that case, you are going to lose some profits that you would have, potential profits that you would have made. So, but that's a notional loss. You can always look at the data and decide that probably the stock is not going to come down. You can buy back the stock straight away from the cash market or in the futures market. So that's the only way of mitigating the linear movement risk.
Okay. So thank you very much, Avani, for joining us today और हमारे viewers को इतना detailed में बताने के लिए अल्फा strategies के बारे में कि कैसे वो market में उसको use करके profit बना सकते हैं और अपना loss किस तरीके से कम कर सकते हैं. And viewers, thank you very much for joining us today. I hope आपको हमारा आज का session भी हमेशा की तरह पसंद आया होगा. मार्केट से जुड़ी हर अपडेट जानने के लिए आप हमारे चैनल को सब्सक्राइब करिए और वीडियो को लाइक करना ना भूलें. और दोस्तों, आप अपने फ्रेंड्स, फैमिली, रिलेटिव्स के साथ भी ये वीडियो शेयर करिए, जिससे कि वो भी घर बैठे इस तरीके की बहुत सारी जानकारी, मार्केट से रिलेटेड अपडेट वो भी जान सकें. थैंक यू वेरी मच. थैंक यू, अवनी.
Thank you.